happy to have James on, check matey, from some great, I think some of the best on-chain research on the interwebs. Really, really enjoy your stuff, James. And yeah, like you said, I think it's a long time coming for us to finally speak, and I'm really glad to, in these crazy days, get your latest thoughts on what's going on. So thanks for coming
Bitcoin
on.
crashes to $100,000 yet again. Can you imagine? Like the headline we always dreamed would happen, and here we are. It's great.
Yeah, people are really freaking out. It's just been one of my things to basically try to, as I say, take away the Malox moments from Bitcoiners. I think it's the best asset to actually hold, even though everybody else says it's super volatile for these, these crazy days. But it still helps to see what's happening in the short to midterm, and I think you can glean a lot of good information from your work. So, let's get into it, man. I saw your last few posts had a lot of good questions about, or had a lot of questions about your very good newsletter that came out recently. Just to start, can you tell us about this massive underwater position that it seems a lot of people have, basically from the 120K level? You can go ahead and share your screen if you want, or I can show some of your tweets.
No, can do. And just before we do, if behind the fourth wall, if you can just flick me a link to this, I'll tweet it out so people can jump on and check out the stream. Yes, no, the point that you raise is a topic that we've been talking about quite a bit at the newsletter. Let me just get my share screen going here. I assume we can pick that one. Yep. Okay. It is a really important, and look, a lot of this stuff is me trying to it's a thesis, right? I'm trying to understand what is most importantly, what is the pain threshold that people are likely to be able to sustain. So I've been using this concept. For those who don't know, my background is actually a field of civil engineering called geotechnical. Let me just tweet this out. So geotechnical engineering is everything to do with the ground. Hang on, let me just tweet this out. Now, in my time as a geotechnical engineer, I have designed many a retaining wall. And this particular chart, what we're looking at is it's a supply distribution. So the x-axis is price. It's broken down into long-term holders in blue, short-term holders in red. Long-term, by the way, that threshold's about 5 months. The reason we use 5 months, or 155 days to be precise, is because at that 155-day threshold, the statistics are a coin is very improbable to move on a particular day. That's what we call long-term holders. For practical purposes, a lot of people like to argue and say, wait a second, 5 months isn't long-term holders. Like, it doesn't really matter because the Bitcoin time chain statistics, it's actually a power law. You'll appreciate this. The relationship between a probability of a spend and coin age is a beautiful power law, just to a T. So the real cutoff there, where things like, what's the difference between a 0.001% probability and a 0.0001? Like nothing. So for practical purposes, it's improbable. So the threshold where things are improbable is at 5 months. Now, this particular chart it's not the supply. It's not in BTC terms. It's in where did everyone invest their money? Because I think most people watching this stream, you've got a bunch of Bitcoin, but you don't really think about how many of your physical number of Bitcoin are underwater, meaning the price is above or below your cost basis. What you really think about, the vast majority of people, is you look at the 25% that you're down, or the 5% that you're up, or the 50% that you're up. People still think in their invested cost basis. So even though there's some hardcore Bitcoiners out there who are living in the Bitcoin world, the reality is most people think about things in dollar terms. Now, when you take it from this perspective, let me just zoom out. I've gone to 50K, but this is basically the entire price history. And by the way, this large chunk you can see on the right-hand side here, the yellow curve here is the total value of this. This is 62% of all the dollars ever invested in Bitcoin have a cost basis above 95K. Now, that's only 30% of the Bitcoin. So in Bitcoin terms, it's about a third of the supply, but it's 62% of the dollars, because a $100,000 Bitcoin is 10 times heavier than a Bitcoin bought down here at 10K. And like, you really just can't see anything, which is why I wind the chart all the way up to 50,000 as our starting point, because by the time you get to 50,000, you're already talking about, there's only 12% of the dollars invested at lower prices. So if we go to where is the current market, we're chopping around. We've kind of come down towards, I would say, the midpoint of this wall at about 100K. We're at the point where about 50% of all the dollars invested in Bitcoin are underwater. But we've got to remember, just because somebody is underwater, and I've seen that you've looked at things like supply and profit or loss, that's a binary system. If the price is a cent below your cost basis, it's going to be in loss.
Hmm.
The guy who bought at 126, sure, he's down what, 20 odd percent. But most of these guys bought at 110. So at 110, they're down like 9%. For most Bitcoiners, 9% is kind of another day in the office. But if you take the price down to 95, now you've got this scenario where there's a lot of people who might start saying, I think I need to de-risk here. Things are getting a little bit too hairy. And if you then drop down, you can see there's what I would call an air pocket. There's really very little support between there and kind of the 2024 chop solidation range, which is 75, 80K. 80K is an interesting level because there's a couple of price models. Sailor's cost base is at 75. The ETF's average is 85. There's a model I use called the True Market Mean, which is 82. So that's like a really nice cluster of models. But the gap between 90 and 70 in terms of like where people bought their coins is kind of a chasm. So my concern is if the price comes down to 95, it's a quick trip down much, much lower. And that to me feels like a real capitulation type wave. Whether we get there or not is a different story, but that's how I'm thinking about at the moment. We're on a bit of a sore point, and I think most people can feel it.
Yep, great stuff. Quick question here: if you drew this same picture, same chart, say back in December, November of 2017 or November of 2021, I presume it would look fairly similar, or maybe January.
Give me 1 second, and I will print exactly that chart. I think the right way to do this. Let's look at when was the all-time high in November. It would have been like mid-November, so I might do like the 18th. That should probably be about
2021, you
right.
mean?
2021, sorry.
Yeah, I got the 8th
Okay, so
on
let's
mine, but
do
that's
let's
a
let's, let's
daily.
do the 8th. Let's do
Yeah,
at
that's
the
a daily
all-time
on
high.
mine. Yeah.
Okay, hang on. Sorry, I got to get my chart in the right mode.
I love that you can pull this up on the per the day.
Yeah, mate. So what a lot of people don't know is there's I ran the numbers the other day. There's 150,000 lines of code that build all the charts that I have on my website. Now, granted, I'm sure I could probably cull, a proper dev could come in and chop a bunch of that off. But this is me as a civil engineer.
I
So
get it.
this is what the profile looked like in 2021, just after the all-time high. Now you can see here. So where did we end up going? We didn't know this at the time, but we ended up going down here to 15K.
Yep.
This, this is the air pocket. This is the scary stuff. There's
Yep.
just no coins that transacted between 20K and 30K. Now, this 30K level is actually a very interesting zone because there's a model called the True Market Mean. The True Market Mean is the average cost basis for active investors. And statistically speaking, the price oscillates around this thing. I think it's the most perfect mean reversion model we have for Bitcoin. It is right in the middle. Now, that 30K level was the middle of that cycle. And you can see that there was nothing down until we got to the ultimate bottom. And obviously that backfilled when the price sold off. But as the market started coming down through all of these levels, these guys started panicking. We got down to 45K. We bounced, Lunar imploded, then these guys started panicking. And you get this cascade. And then once it got to 30K, there was just nothing. It was just open season, straight down, start bottoming out around 15K. So we kind of broke below that midpoint, which is where that true market mean was at the time.
Yeah, very typical for Bitcoin. I mean, with the prior cycles. And I guess the question that everybody wants to know is it going to be the same this time? Can you look at January 15th, like 2018? January 15th, 2018. Because that was such a pure top. I'm curious how it would look compared to today.
18, and we want 18th?
It doesn't matter. Yeah, 15th, 16th. I think that top was December 16th, 2017.
So here's an
after.
interesting story, right? Because like if we think about what the 2017 cycle was, we've come from dollars. Here's a fascinating concept. So when we look at things from a short-term, long-term perspective, we've been chopping around. So let's just go back to our current cycle. We've been, in fact, maybe this is actually a good way to bring this in so people can actually visualize when we talk about long-term, short-term holders. This is exactly what we're talking about. Let me get rid of long and short-term supply. This red part of the chart, this is short-term holders. So everybody really who's bought since the rally, we've had the tariff tantrum, we've bounced. This is the zone that we're talking about when we say short-term holders. So we've been up here long enough that there's a lot of guys back here. These are the long-term holders that you can see in this part of what I call the hodler's wall. So
Yep.
all the buyers from this phase are this large blue chunk. If we go to the 2021 cycle, really intermixed because we had the first all-time high in April, a lot of long-term holders from up there. We came back to that 65K range. I think we tagged 69, but you've kind of got this mix of the long-term holders who bought the first top, the short-term holders who bought the second top, and they all capitulated on the other side. And 2017, I mean, $4,000 was kind of the last place because we just ran up so quickly. We literally didn't have 5 months in that final parabolic move from 4K. And by the way, where did we bottom out in that cycle? Right here, right? We basically came down to where those final long-term holders were when everything was said and done. So this is what I would call a top-heavy market. You've got lots and lots. My framework for a bear, too many people bought too many coins at too high of a price. This is 2017 top, dead on. This is exactly what it would look like if you've now got too many people, too high of a price, super price sensitive.
So how would you compare that then to today? Because I think, well, first of all, I would be curious. We don't have to look at too much data here, but if you do 2021, 2021 December, say 2021 December 15th.
So that would be coming off the back end, right?
Right.
In fact, why don't we do 1st of January 2022? Because I think we've actually sold off by that point. So we do 1st of January 22 for a price guide. We are here. So we've basically come off the all-time high. There's been in fact, we had a liquidation that was not dissimilar to the one that we had in October. So we've kind of come off the highs at this point. Now you can start seeing a giant chunk. This was our 2021. This is the all-time high in November. And now look at how it changes, right? Suddenly you get all those top buyers from 65K. They start capitulating down to 50K. So you've had a lot of these guys go, oh shit, get me out of this thing. I'm going to bail out. And this is basically what happens. You get this cascade of selling. The next guy's stop loss becomes the next guy's sensitive point. Then Luna shows up and goes, yeah, I'm going to liquidate 80,000 Bitcoin in one day. Bang, the next level goes. And it's just this cascade taking people out the whole way.
Yeah, fascinating. Very, very interesting. So let's try to apply that then. The $1 million question or more. I think, I think that there's another popular sentiment, which I imagine you share, is that if we don't go too parabolic, we don't go too ballistic, then perhaps we're not going to, crash as much. I know the cycle's over, yes or no. I've been pretty, let's say, consistent in that as long as we still haven't seen a blow off top, we can't necessarily say the cycles are over. I know everybody, like, it's day by day, everybody's just saying cycles are over, cycles are over, cycles are over. But I still haven't necessarily seen all the data show that the cycles are over. But that's maybe a separate question. First question would be, how do you feel this risk to the major, like really to the downside, based on everything that you just said, it could materialize, which I know is a very difficult question.
No, great question. It's a good question. And it's obviously what everyone wants to know, right?
Right. Based on the fact that we've had this churn so far.
So my current thinking about things, this is the riskiest time we've had this cycle, but I do very much share your view. I use the line, the bull market will author the bear that follows, which is not my line originally. I know I've used it in the past. And in fact, I went looking for the original source because I know I came across it somewhere. It's not mine. And I found some gold article that's quoted me saying that line. So like, I don't know who actually came up with it. So if you're out there, please let me know. But yet this concept is if you have a parabolic run, and this is why when everyone talks about omega candles, you get an omega candle to the upside, I guarantee you're going to get an omega candle to the downside. That's just how these things work, as demonstrated by that 2017, right? This was the boom from 4K to 20K. Where did we end up 12 months later? Back down here, 4K. So this is all fun and games until you buy the top. Now, from a market structure perspective, this is the riskiest time we've had this cycle. Back in 2024, we've had 3 events where people are like, it's a bear market, it's a bear market. One was here. And my general framework here is like, I just don't think it's a bear. Right. Yeah, there was some dynamics that were bear market like, but it just never really hit the same level of bear market potential. We obviously had this tariff tantrum. And of course, this could have been some kind of a top, but again, the way that this market structure started to bottom out. And I want to just really highlight something. Let me get rid of some of these price charts because they don't matter. The first one is the short-term cost basis in the red. So just some simple tips, I think, to help people think through market cycles and just like contemplate regime shifts. In previous bulls, in fact, a lot of our rules or concepts in the on-chain world have broken this cycle, and I've had to be very, very flexible and just like adapting as things change. The red line here is the average cost base of people who bought in the last 5 months. In previous bulls, this was support. You wicked below it and then away you went. This cycle, we chop below it consistently. So I've got a very simple rule. When we're above the short-term cost basis, be a bull. There's no reason not to be a bull because literally every bullish impulse ever is above the short-term cost basis. Now, of course, you can bounce above it and get very excited, but like I'm talking about trading above it.
Mhm.
Now, when we trade below it, there's two other curves here. One is the 200-day moving average. Why? Because every man and his dog looks at it. But there's another model here in the yellow, which is the long-term average of everyone's profit and loss. It's not the cost basis, but it's where everyone's average is. The vast majority of people in Bitcoin, you've got a lot of your coins that are in profit, and they will always be in profit. Price is never going to go down to 3K. So you've been around since 2018. You're probably going to be in profit forever on the vast majority of your coins. But you've also bought the top locally, right? Some people have bought at 110 and 100, and it may not be their whole portfolio, but that long-term average of being up like, I think it's 180% is actually the long-term average. That's what this yellow line is. When we trade below the short-term cost basis, we have bottomed in 2024, in 2025, and here we are at 100K between the 200-day and that average. Now, there is no magic rule that says we have to bounce here. However, pretty much every metric I look at, and look, this is a dangerous thing for me to say, but I'm going to say it anyway, kind of looks like a dip. It kind of looks like a dip. Looks a whole lot more like a dip right now. I did a video the other day. The vast majority of metrics I look at, the way I would frame them up, they kind of look like a dip. I'm kind of buying the dip because it kind of looks like a dip. However, the risk is we go below that 95 level and just stuff turns, stuff can deteriorate. So I'm a big advocate for no one can predict the future, me especially. Doesn't matter how many charts and data I look at, the market will go where the market wants to go. But if I buy at 100K and we go to 80, which is where I think some kind of bear market floor would be if we had one, so what? I mean, how long have you been in Bitcoin and gone through a 20% correction? I didn't buy 126 because by the same token, a lot of my metrics are saying, it's not a great price. Like, so the way I think about this, 100K may not be the bottom, but it's for sure not the top. 126 might have been the top, and 100K is not the top. So at a minimum, I'm starting my buying campaign in a more cooled off state than it was. We didn't get the parabolic run, so I don't think we get the parabolic run to the downside. And I do think at some point in time, people are going to go, okay, if my risk is between 180 or 75 and my upside is infinite, what am I doing being short this thing? Like, just buy it. So I think at some point in time that just worm will turn, and all those momentum traders that are trying to think the 4-year cycle's over, they're going to come rushing back in because they're going to realize, oh shit, I might have sold the wrong time. Like the cycle that I shouldn't have sold, I sold.
Yeah, that can happen quickly. And I think there's a couple things right now that actually could. Uh, Again, by the way, I fully agree with your sentiments. I'm like the king of Midwestern disclaimers where I'm originally from. I mean, you have to. No one knows the future. Anything can happen, and we're just trying to make the best educated, I think, guidance, but also not freak out too much because we know what Bitcoin can do in the long run and how important it is. So
And
yeah,
more importantly, if it goes lower, just be prepared for it. You know what I mean?
yeah,
Like if it goes lower, that's okay. Most Bitcoiners, and this is the thing, this cycle particularly, price goes down 15, 20%, everyone hates it because it's not enough of a discount for them to be like hype, but it's also not punching new all-time highs. If it goes down 30, 40, 50%, you wait. People are going to step in and go, oh, okay, there we go. Now we've got a proper discount. Now I'll step in front of this thing. But like this 20% down thing is just like this middle ground of pain where it's not down enough to get the psychopaths to start really getting hungry.
well said. Uh, okay, let me ask you this. I had a couple charts put up, but you're pretty prepared with all these. So can you pull up a chart of just the full supply curve with the supply and profit versus supply and loss, just based on the 155-day?
Okay, so just remind me if
So
we're
you actually
looking
see
at
the coins. Actually see the coins. I see 15 million in profit and or 14.8 million in profit and 5.2 million in loss. Is that correct?
Yes. So this is actually broken down by long and short-term holders as well. So here's a kind of interesting stat. If we look at long-term holder supply, we're up here about 15 million, and the vast majority of them are in profit. So long-term holder supply is somewhere in around 15 million. Short-term holders, almost every single coin is currently held in loss. There's another way we can actually visualize this, which I think is useful. And again, kind of highlights that this is the time to bounce. If this thing's going to bounce, this is the time. This is the percent supply and profit just as an oscillator. And it's about as bad as it's been on this particular metric. So really, we bottomed here in 2024. We bottomed here in 2025. This is about how much damage gets done. However, this is a really important distinction. Just because a coin is in loss, underwater, doesn't tell us anything about by how much. And this, I think, is a really important distinction because as we know as Bitcoiners, you never buy and the price immediately goes up. No one ever buys the bottom of any dip ever. It just doesn't happen. So yes, you can have a lot of supply in loss, right? And right now, the percent of it, let's just for round numbers say about 30% of it's in loss because 70% is in profit. But the question is by how much? How big are the unrealized losses? Because if the price goes 1 cent below your cost basis, you don't care. The price goes
Right.
30% below your cost basis, you feel it, and you start to go, well, maybe I shouldn't buy that next dip. This is the percent of unrealized loss, the actual delta between people's buying and the current price. I don't know about you, but that kind of looks like every other bull market dip. These are the kind of dips we see in 2017. These are the dips we see in 2025, and we're talking about like 10% of the market cap being underwater as a loss. Bear markets are a whole different animal, and I like to use this mid 2021 sell off. You would have been through this. That sell off, everybody knew deep down something was wrong. It was just way too savage, right? We went from 64K to 29. It just rinsed everyone expecting it to go to 100K. It was a brutal sell off, and I'll never forget it. And you can see the unrealized losses, like you can barely see the losses up until that point, and it just flushed everybody. So when I look at this, sure, if we go down to 95, this will get a bit angrier. If we go to 80K, this will probably start looking like a bear market, but we're not there yet. So that's really how I'm thinking about this at the moment. Like it could get worse, but it
Right.
hasn't got worse yet.
Great point. And I want to try to harp on the extremities though that you're saying, because I think you mentioned even earlier, just now you said the percentage in loss total is something like 30. I think it's even less, right? It's like 25 really
Something like
at the
that.
moment.
Yeah.
Yeah. And then if you compare that 25%, which of course it swings a lot, as anyone can see right there with the yellow line, but you compare that with the huge chart that we just talked about, the huge proportion that is underwater, at the beginning, the first chart. The very first
Oh
chart.
yeah, totally.
How can people sort of wrap their heads around those two numbers? Because it seems like a really wild
Give me a
difference.
second. My computer's frozen, but yes. So the way to think about it. So please let me know if I come back live here. The way to think about it is you've got a huge chunk of coins that have a cost basis up here at this current price level. The price is only just below the center of gravity of that section. All right, I think we're back. So the price is only just below that center of gravity. The way to think about this, let me bring in, I might do it this way, actually. I think these charts will be easier. So this is the global view of dollars invested in Bitcoin. The realized cap is the actual metric that we're looking at here, broken
Right.
down by where those coins were bought. Obviously, the red coins are underwater. Now, these guys here who bought at 110, you can see that's really like the bulk of the buying. They're only down 9%. Now, 9% on a large value is, it's meaningful, but this is the unrealized losses, right? This is what the unrealized losses look like at that point in time. But now imagine at the price, we're at 105 or 103. Now let's drop the price down to 75. What happens at that point in time? All of these coins go from a little bit underwater to a lot underwater.
Right.
These coins here, which are currently in profit, go from in profit to being in loss by a meaningful chunk. So this zone here, and I've actually got a curve here. Let me turn off the blue. This orange line basically says as the price falls, how much do the unrealized losses represent of the market cap at that level? And you can see it's an exponential. It gets angrier and angrier the lower you go. So bear markets of the past have typically started with a 10% drawdown in unrealized losses being 10% of the market cap. That requires us to get to 85K. But the trip from 85K down to 80K, or sorry, 75, now we're at 85% of the market cap. So it just gets exponentially worse the lower that we go. Now, this is a model because in reality, as the price falls, people capitulate, coins go from a high cost basis to a low cost basis, new buyers step in. So there is a turnover effect that goes on, but we can try and just understand where are those points of sensitivity. Now, here's the strange conundrum that I find myself in. If a bear market historically starts at 85K, but my current thinking is that a bear market floor probably happens somewhere around 85K, you're kind of calling the bear when the damage is already done. And you're like, well,
Mm,
now I should be buying anyway. This is the strength that kind of goes back to your original point. The bull wasn't wild enough to generate the bearish downside.
right.
So then you've just got to go, how many analysts out there at these big institutions are going to finally come around to a very similar view that we're talking about here and just go, you know what? The downside risk, yeah, it's there, but it's not and it's not enough for us to stop buying. What if we don't
Yeah,
go there at all and we just keep moving? That's an exciting prospect.
it is. I completely agree with your sentiment there. Do you have any revenue charts, like how much miners make with fees, block reward, things like that? I can show you a couple of mine. I'm curious for your thoughts if you. Um,
I haven't used these in some time, actually, miner revenue from fees. I very rarely look at mining metrics, actually. This is where it gets really interesting. Let me look at, I do have one metric here. I want fee revenue ribbon. So historically speaking, when we talk about like on-chain activity metrics, things that
yep,
describe activity on the chain itself,
yep.
I generally don't spend too much time thinking about transaction counts and address counts. And the reason why is that they used to be high signal. Now they're not because inscriptions and ordinals and all that shit basically has changed. You can fit more transactions into a block. So transactions can hit all-time high, but active addresses actually traded lower because lots of people they use almost like Ethereum wallets. They use the same Bitcoin address over and over again. So it kind of skewed some of those metrics to do funky things. So
Yeah,
what I've historically looked at is said fees. Fees are a high value activity metric because you can't spoof them, and on-chain volume is the other one. So if we look at on-chain volume, this just basically compares the 30-day moving average to the 1 yearly moving average, like a momentum oscillator. Honestly, on-chain volume is massive. So here's another conundrum we've got this cycle. On-chain volume is huge. And I ran a study on this the other day. 75% of all the volume on chain are $1 million plus transactions. It's an all-time
mm,
high of like big money. So we have big money moving around. And yet, this is a Z score on the 1 year, 2 year, 3 year, 4 year of fees, dead in the water. Like
yeah.
fees are just, and this is part of that sub one sat summer thing that's going on. So fees is now dropped off as a useful metric because of, again, these like strange nuances that's going on this specific cycle.
Well, scaling Bitcoin is working, and obviously there's a lot of craziness happening in treasury companies and ETFs that are probably moving a lot of wealth but not showing on chain. Let me just show you one here. I want your thoughts on it. It's still on the revenue. Just give me 1 second. Pull it up.
But yeah, miner fee from revenue, 0.6% of the total block reward is my number.
Yeah. So this one I look at a lot, and like you said, you can look here. This is the 30-day rolling fees. I mean, this was the actually the first JPEG started here, but then you can see that, especially with the last halving, people trying to get JPEGs on before the halving, fees were just crazy. This is block reward plus fees. Okay, so it's a mixture, but obviously this was the highest fee day, was the halving. But if you so like you said, you got a lot of just big change here before you could see, okay, when the price went up, fees also exploded. But if you take this even smoother and you go to a trailing 12 month, this I find is interesting because it's not a top caller, and that's an important caveat. But even now, we are lower in a trailing 12 month than the prior top. So miners make about 17 billion a year. This is academic calculation, of course. If they sold all their coins, and they don't, and they also take a lot of credit to mine, but a lot of them take a lot of debt. But if they sold every coin on a trailing 12-month basis, you would actually be just above the prior top, which again, that doesn't necessarily seem bearish to me.
No, and fees are not. I'm just looking at mine here where I've got fees as well. Fees aren't really making up that difference. It's just simply because we don't have we haven't had the explosive price. The halving has obviously halved their subsidy. I mean, it's a brutal. Mining has always and will always be a totally ruthless, brutal industry. Uh, you can see why they're pivoting to AI, honestly, because like they need to have this diversified revenue stream. It makes sense. They've got to do this because otherwise they aren't going to stick around in business. And they have a very unique role as being really they're tradesmen of power. They're energy salesmen. And I think that's the way that miners should think about their role. They deal in energy, right? They find cheap energy. Whether they mine Bitcoin, whether they mine, I guess you call it mining for AI. What do you want to call it? But
Right.
they're a source of energy compute. That middleman between those different routes.
That leads into some of these other markets that I think could have an effect on this cycle, if it is a cycle again. Do you have any Bitcoin gold charts, Bitcoin versus gold? Because gold is obviously been flying for 2 years. Record
I
runs,
have
40.
gold charts. I don't have that many Bitcoin to gold charts. Hang on. There's one that I do have, which is this one here.
We can come back to it because I have some. I wanted to get your thoughts, but we can come back to it.
No, that's all right. The one that I wanted to look at was this one here. So the first one, let's just initially talk gold because gold is actually the only other asset that I hold in any meaningful size. And this is the 200 week. People hear the Maya multiple, which is price, and the 200 day moving average for Bitcoin. Gold is obviously a much older, longer term beast. So we use the 200 week moving average. The peak that we set at 4,400 is basically as overheated it's been since 1979. So really one of the best performing years we've ever seen for gold. And it was funny because on that day at 4,400, it was the only day. Usually I update my precious metal spreadsheet once a week. I updated it 3 times that day and I said, that's it. It's over. It's done. That's the top. So at a minimum, I knew we were going to have a correction. When I update that spreadsheet 3 times, that's it. But this is the chart that I was looking at for relative performance. So I initially, the first chart that I think is good is versus fiat, because this really just shows the why we're here at the end of the day. I anchor both of these charts, this one and the next one, to February 2022, when the US froze Russia's reserves, because that is the point in time when every sovereign in the world goes, oh, treasuries are no longer a safe asset and they're no longer neutral. So this is gold as the benchmark here in orange, or sorry, in yellow. So I view gold as the inflation rate. Over the long arc of time, fiat currencies and the price of gold is actually just the inflation rate or the debasement rate of those currencies. Because gold, sure, it inflates at 2% a year, 1% a year, but fiat's significantly more. And you can just
Yep.
see that fiat's been crushed, right? 50%, if you're down cut in half, that's a good day. You're doing well as a fiat currency if you're down 50% by there, right? Here's the poor yen down here at what was it, 33% of what it was. But it's not just fiat. Here's your S&P 500. Here's silver, which I think has been demonetized and is moving towards its end use as an industrial metal. Here is your US dollar, and here's toilet paper TLT, long bonds down the bottom. And then Bitcoin, sure, it's taken a bit of a hit recently, but it is still, since that important date, and by the way, this includes the bear market, where Bitcoin got cut in half versus gold, one of the only assets in the world that is in fact outperforming over that long arc of time. Now, again, let's not kid ourselves. The last couple of months has been a bit sad, but that's also because gold's having its best run since 1979, right? 9 years after it got taken off the gold standard, and we're in that full parabolic mania. So gold is having the best time it's had, arguably the second best time ever. And Bitcoin is kind of the only asset that's even remotely keeping up with it, aside from your high flying Nvidias and tech stocks and the like.
Yeah, and I'm wondering when those gold investors go into Bitcoin. So I got to show you this one now. Get your thoughts. So it's also a power curve on gold as it is for dollars,
Oh,
Bitcoin.
interesting. So this is the BTC gold ratio.
Right. Yep. 95%. I think dollars is getting close to 97% right now, but in gold it's 95. And so right about here in the 2017 run up, you see all these numbers turn to one. So that's when Bitcoin becomes 1 ounce of
Ah, got
one
it.
ounce of gold can buy you 1 Bitcoin. And if you go to the time period you're talking about, which is here, and then down, the lowest, which was under the 10th percentile, that is deviation from the trend, so 0.3x the trend. It was below that, you see, the price after the puking of FTX and everything's under 10 ounces. That was like the low. And now you see how low we are with gold
You're on the
performance
second lowest band.
over the last 2 years. This is what I really wonder, because obviously there's so many similarities between gold and Bitcoin investors, no matter what Peter Schiff wants to say. Bitcoin is actually super cheap in terms of gold ounces. And, I have a hard time. First of all, imagine that we do have like a full deep bear. I have a hard time even just seeing that based on the general statistics of this chart. I mean, it's a major move down. Like getting below the one here, it's a 10 percentile event. And and
Yeah,
then
the
on the other
stats aren't on your
side,
side.
right? And then on the other side, and I'm not trying to be too bullish here because obviously, the markets can be wrong long after you've run out of capital. But the trend is 60 ounces of gold at the moment, and we're less than half of that. So there's your 250K Bitcoin. If it just simply gets back to the trend that it's
And
been
what's the
on,
all-time high? All-time high is
uh,
30 ounces or 32 or something like
we
that.
got to 35
Yeah,
here.
yeah, just over a kilo.
Right, exactly, precisely. So, you know, the, it's always going to be a question. It's the same question for the dollar chart. Are we going to keep punching above this 9 every cycle? And then everybody wants to know, are we going to have a cycle? But yeah, I'm curious here. You showed a lot of good charts right there to show Bitcoin's strength still relative to gold. I'm having a hard time seeing gold bugs get such a good deal on Bitcoin, uh, even lower than 20 ounces.
And you
Even
said
the
64 ounces was the
is
top
the
level
trend.
there.
It's the 64 ounces is the trend today, right now.
So
That's that.
that's just getting back to where it belongs, really. That's your fair value
Precisely.
target.
Yeah,
250.
and
Well, hang
yep.
here's an interesting chart. Let me just bounce off top of this. This is a very, very interesting chart that my friend Permal Nino came up with many, many years ago. Um, we were talking about mining before. The thermo cap is the cumulative sum of all mined coins at the value when they were mined. So really, I think about this as like the ultimate cost of production of Bitcoin. Now, what we've done here is simply applied these different ratios, 2x, 4x, 8x, all the way up to 64x. So 64x has historically been, so this is above the cumulative cost of production, like almost the exact tag of where we should have topped out, currently sitting at 280K. So we're getting up into those ballparks where like the production premium, the relative to gold, these are all in a very similar, like fundamental ballpark type number. But the thing I really like about this chart, if you go back and think about previous cycles, 2017, 2021, they were very speculative in nature. And you can see because we shot up above the cost of production and we got slammed right back down to it. Notice that every single cycle, straight up, slammed back down, straight up, slammed back down. This is the first time that we've just been grinding up between these higher altitudes. It's just
Yeah.
climbing up through these levels without the bubble, without the euphoria. It's basically saying that the cost of production, if that is your like base level, every single bear market, we bottomed in the first bear market at the cost of production. Second bear market, 2x premium to it. Third bear market, about a 5x premium to it. Then we start getting up into the 8x, 7x premiums. And we're just getting this slow drift higher where the miners have a less and less important role because people are genuinely and measurably assigning a value to this thing above what it costs the miners to produce it. So it's this kind of residual value that's getting baked in by investor sentiment, which I think is a really cool concept.
I love that. Where do we go regarding do you have any charts that can show sort of we talked about the treasury companies a little bit. Any charts to show sort of the weird dynamics that are happening with ETFs, treasury companies, or maybe even other layer 2 or layer 3 things on Bitcoin? Because, obviously these things are going to morph and change, and it might not always give us the same signal.
Oh, absolutely. No, this is a really key area. So I actually want to start with this chart. The number of narratives that I see of folks, so in my opinion, there's been three major cornerstones of market structure this cycle. First one is the ETFs, obviously.
Yep.
Second one is there's just unbelievable volumes of sell side pressure from existing holders. So that's a really important one that we should talk about. And the third one is the launch of IBIT options. Now, there's a few different layers here. Let me just get that one up so I don't forget it. The orange curve here, this is the 30-day change of a metric called the realized cap. So the realized cap is the on-chain market cap. We value every coin in the supply at the price when it last moved. Now, why this is really interesting, if you buy at 10K and you sell at 100K, someone else has to come in with 90 grand extra dollars times the coin value to acquire those coins. So when the realized cap increases because someone took profit, one guy's profit taking is another guy's first buy. So you need a capital inflow to absorb coins at higher cost basis levels.
Yep.
So the 30-day change of the realized cap shows us the net capital inflow. Someone buys the top and sells the bottom, they've destroyed capital. So that's a capital outflow. It nets all that against each other and says, well, how much money is coming into Bitcoin by that metric? Now, right now we're trading around like $32, $25 billion a month. So we're seeing serious capital inflows. But the green curve down the bottom here, that's the ETFs, the net flows in and out of the ETFs. So a lot of folks are saying that existing holders who are selling, they might just be rotating into the ETFs. Some of them might, but they're about 5 times too small in terms of the ETFs to account for the sheer volume of sell side pressure that's going on. So we're talking about at the peaks, 80 billion a month, 100 billion a month. We've been chopping around 64, 40, 50. There's been serious profit-taking volumes, and this is really why the price has been going sideways, because there's just a lot of sell side. Now, the other narrative we can put to bed, let's take away the ETFs. This is treasury companies, and the dark purple is Sailor, the light purple is all the others.
Right.
There's been so many TradFi guys saying Sailor's the only one buying this market. I'm like, well, I don't know. You're kind of missing at least 90% of the rest of the market, because Sailor's there, but he's a buyer against a wall of 90% bigger sellers. So sure, he's an important part of it, but he's certainly not the only one keeping hold of things. So that's really like two key insights and misnomers, I think. First, that hodlers don't sell. They definitely do. Sailor isn't the one propping up the market. And no, they're not rotating into the ETFs, because the ETFs are about 5 times too small to make that math work.
What's the delta there compared to 2017 and 2021?
Well, we didn't have treasury companies. We didn't have ETFs, but here's the total capital flow.
Let's just look at the realized cap then, yeah.
Realized cap. So if we look at the 2021 cycle, 64 billion, 61 billion, 43 billion. And this is another just good way to think about things. Like when we talk about things like revived supply, profit taking in the on-chain world, the truth is there's stacks of error bars. Someone might just be spending their coin and moving from a ledger to a cold card. Totally can happen. But notice how we get the most amount of profit taking at the peak, right before the market stops going up. Like pattern recognition says, okay, everyone didn't decide to do UTXO management at 100K because they're like, oh, it's just a good day to do it. They're taking profit.
Yep. And then how would you feel about those peaks, the realized cap flows, compared to obviously this current churn? We have those sort of 3 peaks, but it's much longer and wider since treasury companies sort of started to take off. How do you expect, is there anything that could show that maybe we would have some sort of a, blow off type top again, or is it just going to keep churning higher there? Because it seems like that churn can go on for a long time.
Totally. My view, and this is it's the one question that like I have some answers for, but I'm not satisfied that I have enough of an answer. A lot of people might have seen Jordi Vis's piece about like Bitcoin's IPO moment. I thought it was a really nice way to like frame this idea up. May
Yep.
or may not be true, but I think it's a good narrative to at least give some, take that idea, take the essence of what he's saying, because we are in the midst of, I think, the greatest rotation we've ever seen of existing holders out of Bitcoin. So this is revived supply, which is the US dollar value of coins that had to get to 6 months old at least. Now, some people will say that 6 months old isn't a real hodler. Let's get rid of them. It's still historically high, no matter how you want to slice this thing.
Yep.
Lots and lots of older coins are coming back to life. And I don't know about you, but that to me looks like a ripping uptrend. More and more of these coins coming back to life. This is why the market hasn't gone higher. It's not price suppression. It's not market manipulation. It's not derivatives. It is just simply good old fashioned sell side pressure in the spot market. And Alex Thorne and Galaxy did a good chart I saw today, and I replicated this morning. This is the dollar value of all revived supply by year. Now, let me again get rid of that 6 month. Everything older than 1 year, right? We're talking about $300 billion this year of coins older than a year that have come back to life, and about 56 billion of 5 year plus, right? Let's get rid of everything under a year and only look at 5 years. The biggest that we've seen, right? 2024, 2025, the biggest rotation of capital out of Bitcoin that we've ever seen. So I can't help but just, like, when I take all of this in stride and view, look at the sheer volume of sell side. And the price didn't go to zero. Price didn't go to 20K, didn't go to 50K. It crashed to $100,000 and went
Right.
sideways for 12 months under billions and billions of billions. And it truly, the question people should be asking is not, why are these guys selling? Who on earth are the buyers? Because they have really, really deep pockets. And I can't help but think, if you're standing there just buying like billions of dollars, and these guys aren't FOMO buying, they're allowing the market to sell to them. They're patient, they're sophisticated, they're absorbing, they're not chasing.
Yep.
These guys aren't looking for a 10% pump, guys. These guys are forever allocators. They're serious money. So at some point in time, that's where we're going to see a true supply squeeze, because these guys aren't going to be sellers. I can't imagine they would be.
Yep. And next question I was going to ask, we also got one from a viewer here. What about losses? Let's not start with percentage, but can you do like in dollar terms? What do the realized losses look like?
Realized or unrealized? We can look at both.
Realized. I'm curious
Realized
about
losses?
realized.
No,
Yeah.
that's a good one. Yeah. So realized losses. Let's go. Sorry, let's start with profit. Give us a bit of a picture here. Here's those realized profit peaks. This is on a daily basis. So back in 2021, 2.6 billion, 1.8 billion, 3.5. So in a single day, this is how many coins are coming back. And by the way, this is just the delta between the cost basis and the acquisition price. The actual coin is worth the profit it had and the original cost basis. So there's actually more net sell side that's got to come in. But on the loss front, so in all of our dips so far, you can see the nature of bears, right? This is true capitulation, $1.2 billion on a single day. The interesting thing actually is, at bear market bottoms, you actually see profit spike as well. This is how you can determine a bottom from the bottom. At the bottom, the guys who are bought at like 10K, even they're selling because they're like, holy shit, this thing's going to zero. I got to get out and preserve what I've got left. These are all long-term holders who stuck around the whole cycle, and they sell the bottom as well. That is your capitulation of all capitulation signals.
But I mean, that's interesting. Can you put that back on? They were selling all the way down, to be fair. But then you're right. It sort of that little bump there is
As
pretty funny.
FTX implodes, they go, get me out.
Yeah, that's wild. That's wild.
Yep.
And so it's
And then also you can see the relief bounce. People taking profit as they see the first rally off the bottom. They go, shit, get me out of this thing. I'll take it. 20K,
so
I'll take it. And then we go to 100.
so let's talk about what we see right now in the last year, or basically since the ETFs, which you see there January 2024. What do you see there? What's your takeaways? With
So first
both
thing,
realized
this is
versus
the great
unrealized?
rotation. Yeah, this is the great rotation. You can just see how long this has been going on for. Really, since April, since the tariff tantrum, we've seen just the profit's been massive. The revived supply has been massive. $500 million of realized loss on this particular sell-off. Not the worst we've seen so far, but certainly on par with our previous dips. And again, going back to the very first point I said, kind of looks like a dip, kind of still looks a little bit like a dip. Can it deteriorate and get significantly worse? Yes. But really, I'm actually not too worried. I mean, realized loss is a good sign for me to step in and buy. I like buying the pain because when you see a bunch of people who bought the top capitulating out of the lows, that's a good sign. Uh, it's the profit taking. This is really the thing that is just weighing on this market right now. I don't know when these guys run out of coins because based on their where's the revived supply? Based on their revived supply, it's not right now. Right, they're still accelerating. They're actually accelerating in their sell side. But I'm actually glad the market moved. Right, I'm obviously not happy that it's gone lower, but I'm glad the market moved because that sideways chop, even for me, I spend all day in the data, all day in charts, the hardest market to read because no one knows what to do. No one has any like direction. It's not going up to take profit. It's not going down in panic and fear. The sideways nothingness. Now that we've got momentum, people are going to start acting. They're going to do stuff. And now I can start reading their sentiment.
Well, to answer my last question to you, I mean, I look at that chart and I have to think it's just, it has to set a new high in realized value, realized profit to be a top to me. I mean, it just has to. I mean, okay, never again. I can give so many disclaimers, but if that top was actually in this chart was actually back a year ago, it just seems very odd to me that this would be.
Yes, but you've also got to think about the nature of these things. The ETF peak and this one here, this is what I would otherwise call the on-chain top. Let me actually pull all the way back out to 2021 because it may not be the best view here, but actually it's not. Notice this peak here, right? This one in January. This is what we call the on-chain peak, and I'll show you why. If we look at it from the realized profit and loss perspective, I got too many charts open here. I want to talk about options and derivatives too. Where is my
Excellent
profit and loss gone? Notice that the realized profit actually peaked in January, not at the high in April. And the realized profit here at the second all-time high was nowhere near it. So there's
Yeah.
a few stories we can pull out of this. This peak here, let's balance this as well by, sorry, I want to bring in this metric here. So Coinday destruction peaked on that January high. It actually peaked in the ETF high as well. So this is when you got the most profit taking by old coins in a very, very concentrated chunk. But if we think about this from like a momentum standpoint, the selling happened in January. The market kept going. Now, what we didn't know at the time, I think properly, was that GBTC was hoovering up 660,000 Bitcoin because of that premium trade. It went into a discount here in February, and we had declining profit taking and a dying price. Price was curling over under less sell side. So you're actually getting a slowing down of momentum. And on this second all-time high, if we just take a very objective view here, we got to, for argument's sake, the same all-time high price, plus 5K, but who cares? And there was less sell side to kill it. There's way less demand. It's telling a story that we just don't have the demand because you've got less selling and the price still couldn't keep going. So it's really telling you we had way more buy side demand. And that's why profit taking, it's a counterintuitive idea. One guy's profit taking is another guy's cost basis. When someone's taking profit, someone else is bringing new capital into the market. But if you have too much profit taking, you oversaturate it. So now let's bring it back to our current structure. There's a lot of coins that were once dormant that have come back to market. They've got to find a cold card. They're going to chop around and move between traders and investors and hodlers, and they're going to bounce around until they finally find someone who's willing to take them off the market for good. And that takes time. So there's just a bigger pool of coins still out there trying to find that forever home. Now, maybe we've got these sophisticated buyers taking them off the market, but just because we haven't got to the same peak doesn't mean we can't curl over. It may just mean we have less demand than we think.
Excellent. Let's go back to this question before we go to derivatives. I think he's looking at just over, but let's still. Can we do realized loss in percentage? Do you have that?
I don't have realized loss because it's volume metrics are much harder to do a percent in. We can look at this tool, however, which is the ratio of profit and loss. Helps you kind of understand what it's similar to doing it as a percentage, but it's obviously going to move in exponential space because when you've got lots of profit and no losses, you're at all-time high. Obviously, your numerator is infinite. and your denominator is near zero. Again, I'm going to say it again, kind of looks like a dip, kind of looks like the previous dips. Like we're coming back and we're getting to that point where there is now slightly more loss than profit getting locked in, very, very slightly. So we're coming back down and testing that neutral level. We will see how this plays out, but these retests, generally speaking, bottom of the 24 dip, bottom of the 25 dip, we might get a couple of processes we hammer out a bottom. Totally could happen. What we don't want to see is us go into loss and then stay there. Because if we think about this from like a behavioral economic standpoint, every time we got a dip, the top buyers get flushed out, but the smart money go, thank you very much, I'm going to step in. We bounce higher again. Once we break below and we stay there, this is now the kind of environment like in a bull, you want people locking in profit. Not too much, but you want them to be locking in profit because that's what bull markets are. A little bit of loss on the dips is fine, but once people are in loss all the time, every day, sentiment gets worse, it sours, and then people start selling the rip rather than buying the dip. Every time price goes into profit, they're taking it. Get me out at any price. So you don't want this sell the rip negative all the time behavior, but the occasional, mostly profitable, sometimes give me a negative dip.
Okay, and then one more back to the overall the supply curve of let's just say short term, long term.
The short term, long term.
Who's in profit? Who's in loss on the supply curve? Any more commentary on this?
So if we do, let's look at just short term holders, and I'll stick this thing on cycle 4 because that's really what matters. So here's another general dynamic I think is interesting to think about. Long-term holder supply, which is the blue curve here, coins older than 5 months. There's a nuance to this. If a coin is 5 months old and it is spent, it's immediate. So when long-term holder supply declines, it is instantaneous. It means coins are being sold that day. When long-term supply increases, you will see guys on Twitter saying this all the time. Long-term holders are buying. No, long-term holders bought 5 months ago and they still hold. So there's a lag for it to go higher, but the selling is instantaneous. So in 2017, the bull was one big ass sell side event. As the market rallied, more and more people sold. If you think about people who are scaling out, they ramped up their scaling out as we did that final short-term holder run that we talked about earlier. Same in 2021. We got the maximum sell side pressure on this first peak. And actually notice long-term supply was increasing through the second high. But that's because the people who bought this top hodled the whole way to this top, and then they got smoked again. So that is why the 22 bear market was so brutal. What do you notice about this cycle? Very different. We've had one round of sell side, a recovery, and the recovery is the really important thing here. Another round of sell side, and then we've got this more gradual rate of change.
Yeah.
Now, if you've got these sellers, we've seen the sellers with realized profit, Coindays, all those. Notice the recovery. This is the buyers. The people who bought that all-time high in March and April, they hodled. And then we got the next wave of sellers, and the people who bought that high, they also hodled. So you've got this very interesting dynamic where the buyers of Bitcoin this cycle, the people who stepped in and brought that 62% of capital above 95K, we've got actual hodlers buying up here. And that's bear market behavior. So this is this very strange structure about this cycle specifically. We've kind of got bear market behavior at all-time highs, and we've had 3 versions of this. It's super strange because it feels to me like we're building floors, not ceilings. That's my like gut feel. Feels like the sideways price action is more of a floor than it is a ceiling, which is a kind of strange idea.
Yes, it is. I appreciate the disclaimers. Look, one more. This Jimmy's talked a lot about the RSI. We have a lot of support there too. Do you have anything else that could show exactly the kind of the thesis we've been talking about this show, where there could be more support than people realize?
Yeah, let me pull up to this metric here, Hodler's dashboard. This is my like metrics that I look at in the morning. This is about as far as I need to go. It tells me pretty much everything I need to know. Top chart, this is the MVRV Z score, but I use a 2-year moving average. So it's really looking at a topping cloud type behavior. First things first, keep it really simple. We're not at the top, right? We might have been at the top at 126, but we are not at the top right now. Simple, like for Check the Hodler, he's very happy to say, I'm not buying the top anymore. So now I can actually start thinking about it. Short-term MVRV, do I want local top buyers to also be underwater? Do I want to be below the short-term cost basis? Yes, because now we're also not going to be at the top. So if you think about this from like a de-risking standpoint, de-risked, and that's why you'll see we're negative, right? Price is bearish, but my colors are green because it's actually a good thing for me as a hodler. I want to stack sats when we're not overheated. SOPA is the sister metric of MVRV. So MVRV tells you the average unrealized profit or loss. So think about that as people's incentive. What's their mood? SOPA is what are they doing about it? When it's red, it means they're taking losses. So you actually, the cruel thing about markets is people are wrong all the time. I want to do the opposite of the dumb fast money. The dumb fast money bought the top and they're now underwater, capitulating, and really not putting on that much degenerate leverage. Funding rates aren't that high. So we don't have an overly levered market. We don't have a top signal. We have local top buyers underwater and we have local top buyers taking losses. As a hodler, I know I'm not buying the top right now. I may not be buying the bottom, but I know I'm not buying the top. So just kind of simplifies my whole framework and says I'm kind of a happy stacker, right? I'm not going to go all in here because of the bear market framework, but I'm also not buying the top.
Love it. We're at an hour, so just tell me how much time you got, but I got one more here.
I can probably do another 10 minutes, and I think it's probably worth tagging the derivatives topic because it is a big one. That's the third element that is probably not as well understood this cycle, but particularly in the world of options. Let me pull up this one here. So first things first, let's start with the role that derivatives have. So ETFs is the first big pillar of this cycle. Long-term holder, just like the rotation of capital from existing holders, is the second one. Third one is the role of derivatives getting linked with the ETFs primarily, but just Bitcoin in general. So if we go back and think about pre-November 2024, so the IBIT options went live in about this time last year. The yellow curve here is the CME open interest, 30-day change. The green is ETF, 30-day change. Now, the cash and carry trade, where people will buy the ETF and short the future, has been a huge part of this cycle. It's been massive. And notice that we had this very tight interlinking between CME open interest and the ETF flows. They buy the ETF, they short the future. When the premium compresses, they sell the ETF and they close out the position in the futures. Notice how the ETFs have suddenly taken over and CME's kind of not, that correlation has really died. When did this really start? November 2024. Why? Because IBIT options showed up. Options, this is the 30-day change in options OI. Now, it's not quite as clean because you get expiration, so you get these sharp spikes to the downside, but quite clearly, if CME is on the way out, options are on the way in. Now, if we look at options open interest, for all of Bitcoin's history, futures open interest has been like 60, 70, 80% dominant versus options.
Yep.
We're now over 100 billion. Futures are down at 64 after that deleveraging. Options are now the big dog in the room.
Nice.
This is, of all the bull markets in Bitcoin, the options market is the biggest bull that is currently underway. And this is the dominance chart. The orange down here is IBIT. And by the way, 2 insights here. Orange is IBIT. This tiny little red thing here is FBTC, the second biggest ETF. Options are a winner-take-all market. Yep. And here's poor old Deribit here in yellow, which has been the market dominant leader 90% plus. Within a year, lost its throne. So I was told many years ago that options on Bitcoin is going to be the killer product for Wall Street. And here it is playing out in front of me, clear as day.
100%. Very, very interesting, my friend. Got one other question here. Is there a path to 444 today?
I mean, eventually. Not today, but soon. Probably the last thing, just so people can just like frame this up. IBIT AUM in Bitcoin terms in orange, options in red. There is now 56 cents of options open interest per dollar in the IBIT ETF, and we are a year into this thing. If you look at gold, gold is like 120%. So the options are 1.2 times bigger than the underlying. So wrapping your head around how options affect market structure is really like it's going to change the volatility profile forever. And if I can leave people with like a nugget of just something to ponder or think about, options only trade for between what 9 a.m. and 4 p.m. Monday to Friday. Bitcoin trades 24/7. What happens when Bitcoin moves in a big way and all those options traders on a Friday afternoon, all they can do is look at their positions and their portfolios getting redder and redder over the weekend. They can't do a damn thing about it. There's going to be a point in time we're going to get an explosion of vol, and there's going to be a lot of pain on that Monday morning. So that's just something to pay attention to. There will be fireworks again.
Do you think that happens this cycle?
I don't think it happens this cycle. I think it happens. I don't know when it happens, but it will. Like at some point. And if we look at the open interest spread right now, a lot of people sold calls right above the current price 105, 113, and 126. They're the two pockets where we've just got tons and tons of people, whether it's covered calls, whether it's whatever structures they've got. There's a lot of people who expect the 4-year cycle to play out. They've sold calls accordingly. There's also a lot of people who've bought calls because it's a two-way market, but it does interest me at some point that we're going to get some kind of gamma squeeze and all those guys are going to look at their portfolio on a Friday afternoon and go, oh shit, I think I made a big mistake.
I love it, James. Listen, thank you very much for your time. We might have to do this more often, maybe once a month or so, but it's always good to read your stuff, and it's good to finally chat.
Absolutely. I'll take any excuse. Like some of the charts I went through today are in my deepest, darkest archive. There's a lot of charts I only pull out when we're talking nerd math.
Yeah.
Some of them I use because they're more approachable, but I'm more than happy to go down these rabbit holes.
I love it, man. Listen, as we close it, any final thoughts? People probably know who you are and where to find you, but anything else to say about this market
Honestly,
we're in right now?
yeah, look, I say this all the time, but I think it's really useful. You cannot predict the market. And if you try to fight it, it's like swimming against the tide. You get dragged out to sea. None of us can control the market. The only thing you can control are your decisions. So the way that I like to structure my analysis and just like to help people think about this stuff, just plan ahead. If you just like envision what will you will do if we go to 80K. Don't worry about if we go to 80K. Envision what you are going to do if we go to 80K. And then also envision what if we don't? Because like for me, if I'm sitting there with a lump sum, for me personally, and we don't go to 80K and suddenly we bounce, I'd be pissed at myself. If I bought some chunk of that now and then we went to 80K, sure, I didn't get the best price, but I'll buy there as well. So that's how I like to think about these things is like, I've already made my decisions. I'm going to stack sats around here at 100K because it still looks like a dip. I know that we may go lower. And if we do go lower, I think we go into the 80K region. So I'm going to have some like waiting to go when that happens. But if we just start drifting higher, I'll start allocating again. So just think about your decisions. Don't worry about what the market's going to do. Don't try and predict it. There's no way to predict the future. Just predict what you're going to do. If you solve that problem, everything else follows.
Yeah, sage advice. I like the cut of your jib, James. You gotta give those disclaimers, but you also got to put people in the right mindset because anything can happen, and the rest is probability. So, listen, man, thanks a lot for joining. Best of luck. Hope the child sleeps through the night, and let's talk soon.
Good on you, mate. We'll do this soon. Cheers.
Right. Take care, man. Thanks, everybody.